Seeds of Wisdom RV and Economics Updates Wednesday afternoon, November 19, 25. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Good afternoon. Dinar recaps. Gold prices rebound on U.S. data and central bank demand. Dinar investment advice. Safe haven demand surges as economic risk returns. Overview. Gold recovered modestly on November 18, lifted by weak U.S. labor market data and renewed rate cut hopes. Deutsche Bank projects an average price of $4,000 per oz in 2026, citing strong official sector demand. Goldman Sachs reaffirmed its long-term bullish stance, targeting $4,900 per oz by end 2026, with central banks buying aggressively. Key developments. Central banks continue major allocations to gold, with Goldman estimating approximately 64 tons purchased in September. Softer U.S. data, e.g., unemployment claims, raised the probability of a December Fed rate cut, adding to gold's appeal. U.S. equities declined while treasuries and gold gained, a sign of risk-off repositioning. Why it matters? This is a resurgence of structural demand for gold, not just short-term hedging. Central banks' accumulation reflects long-term reserve strategy. Combined with macro volatility, it signals growing systemic risk and a potential shift toward hard asset reserve models. Implications for the global reset. Pillar 3. Metals and strategic resources. Gold is increasingly functioning like money, representing a move toward tangible reserves in a multipolar system. Pillar 5. Currency and payment systems. As central banks rotate into gold, it challenges fiat currency dominance and signals a possible transition to a more diversified reserve asset base. Italy moves to assert state control over $300 billion central bank gold. Rome debates reclaiming its gold reserves amid broader reserve asset politics. Overview. Italian lawmakers revived efforts to claim the Bank of Italy's approximately 2,452-ton gold reserves, worth around $300 billion, for the state. The proposal could redirect the gold's value into public finances. Critics warn the move threatens central bank independence and could breach EU norms. Key developments. The claim is being introduced via a budget amendment. There's discussion of taxing undeclared private gold holdings to raise revenue. The debate intensifies over how national wealth should be managed, between sovereign control and central banking authority. Why it matters? If passed, this would be more than symbolic. It would represent a shift in how nations treat their reserve assets, using gold not just as a hedge, but as a lever for public finance. It underscores how gold's strategic role is being repoliticized in a world that increasingly questions the primacy of the dollar. Implications for the global reset. Pillar 3. Metals and strategic resources. States are elevating gold from reserve asset to political instrument. Pillar 1. Finance and investment architecture. Reclaiming central bank gold could reshape the balance between sovereign wealth and independent central banking. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: dinarrecaps.com